time now for the big three stocks, 3 charts, and 3 trades. Kevin Green will take us through the charts, and here to take us through the trades is Joe Tigay, portfolio manager of the Rational Equity Armor Fund. It's great to be with both of you. Kevin, I talked to you earlier this morning. Joe, let's start out with the names on your list. Palantir. Another big day for this company. The stock is rallying almost 8% at the moment. Tell us about your views on this one.
Yeah, it's just a generational company continuing to deliver stellar growth on complex data issues. And in this world of AI, they are the company that people are looking to as to what are the possibilities, what is going to be happening 3-4 years from now. Palantir is the company everyone is excited about. Now, as an owner, it's something that I'm very excited about too, but you just look at this multiple and it has just grown so far, so fast. It makes a ton of sense to look for some covered calls, to look for an area and just say, hey, I want to just collect a little income. Because another thing about these cover calls is these premiums are so juicy. Just looking out to next week, Friday, you can look at the 185 calls. They're like $3. That's about another 6-7% up to the upside. It seems really attractive to me to look to say, hey, I can collect some more premiums while I'm holding Palantir. If we race your 185, great. Maybe I'll roll it. Maybe I'll look for another opportunity.
Okay. Kevin, tell me what you notice about this chart. I mean, look, this has been an outperformer year to date, and there are all these questions going into this report about if the valuation was justified. It certainly, at least from this most recent report, it seems that way. But what do you notice about this chart?
I mean, it's up to the right at the end of the day. So not a lot to actually put on here when it comes to trend lines and things of that nature. If we look at this time last year, it did trade to that 200-day moving average, sitting at around $21.23. But now we're trading at around $176. So this stock continues to move to the upside, leveraging that 20-day moving average as an area of support pretty much throughout. We did see a little bit of a consolidation back in February where we had this cup and handle type of pattern where we made new highs. We came back, we consolidated for about a month and a half or so, retested those highs, failed, came back, hit the 20-day moving average, and then we started making new highs ever since. So the first thing that you want to see right now is obviously we're breaking out to the upside of this channel that's been well defined since May of this year. That's going to now, that upper end of that channel line, that resistance area is now going to turn into an area of support. So you're sitting at around $162 or so. And if we see any further breakdown to the downside, the 20-day moving average is going to be your first key area of support. Another area of support to be mindful of here is going to be the $125 level. There's actually a pretty sizable node when you're looking at the volume profile at that level, so maybe some buyers would step in there if it were to kind of retrace towards those levels. But the stock continues to move higher. What you don't really want to see is a reversal type of pattern, a shooting star type of pattern, or a reversal pattern over the next couple of days, or even on a weekly chart that might indicate some exhaustion. When you're looking at the RSI, you're going to see it's in a well-defined range here. That just means that the price action has been, for the most part, very stable, very healthy. You want to continue to see that. In MACD, for the most part, it's in a bullish formation. 12 EMAs above the 26 EMA above the zero line here. Once again, not a very complicated chart, up and to the right, and you play the trend until the trend breaks. And there's several different levels to break to the downside here before maybe sentiment changes on this name.
Okay, yep, up and to the right. That's certainly what we see, especially when you look at it on a one-year basis, not just a year-to-date. All right, Joe, let's talk about the next one ticker on your list, TSLA. Everybody knows this one is Tesla. I mean, look, it's been an underperformer year-to-date when it comes to both the broader market and the Mag 7. What's your view on this one?
Another long-term view here for Tesla. People are maybe concerned about the big gift of stock bonus, maybe however you want to call it, to Musk. It's something that's happened before in the past, hasn't really slowed down the stock. I'm still looking long-term. I'm looking for robotics. Now, everyone knows Tesla as a car company, and they're, yes, they have like autonomous cars now. They are all throughout Austin. Google, another company we talk about next, another company that has these autonomous cars, which I'm viewing them as robots. Yes, there are cars, but they're essentially robots. And who has the manufacturing for these robots? Well, that is Tesla. So I think that is going to be their mode. If we look out 5-10 years in the future at Tesla, we may see a company who, Amazon, what cars are to Tesla will be what books were to Amazon, where Tesla is a manufacturing of this AI partnered with a robot, which is what we'll be seeing in the future.
Okay, Kevin, when you look at this chart for Tesla, what do you notice?
Yeah, it's not as bad as maybe the headlines have kind of portrayed this name over the last couple of months. Obviously, we saw this nice rally after the election and kind of that Elon Musk, Donald Trump premium being priced into the stock. It got a little bit rich when it came to valuations, trading at around $480 or so. We saw it lingering up there, and then we saw a breakdown in the stock. Along with the broader equity market, it broke below the 200-day moving average, and it consolidated between March and pretty much, let's say, the middle of May. But we did see a decent little breakout, breaking above that 200-day moving average, trying to test that $365 level. Now, since that level, we have been making lower highs. But if we look at that channel line and extend that out, you could actually see a wedge pattern actually taking place or forming right now. And in fact, the stock is technically making higher lows pretty much since the beginning of June here, and we're getting fairly close to the apex, probably another 2 weeks, 3 weeks or so until we get to the apex, and then you would expect either a breakout to the upside or a breakdown. The fact that the stock has not re-rated lower into that channel once again and consolidating, I think is actually a pretty decent sign here. And once we get closer to that apex, we get a breakout, you get some buyers to really step in, and if you can clear that 350 hurdle, which there's a very big volume node at that level here, that's when you start talking about a squeeze to the upside. And then I would be actually focusing on that 380 to around that 435-ish area for an area of resistance here. So it doesn't look too bad. I know the headlines aren't that great, but at the end of the day, you kind of like to see this coiling taking place before a potential breakout to the upside. And maybe it gives us enough time, maybe in the next earnings announcement or so, as Joe was kind of talking about, to get an update on robotaxis, to get an update on autonomous vehicles. And if we are continuing to have that thread within this narrative, the technicals kind of suggest that we should be preparing over the next month or 2 months here for a potential breakout to the upside.
Okay, all right. Joe, let's talk about the last name on your list. Is another member of the Mag 7. It's started to play some catch-up now. I mean, it's up slightly year to date. The latest earnings, it did better than expected. What's your view on this one and where you take it from here?
Yeah, company closing in on $200. We were there earlier in the year. Their revenue is 20% higher now. So it just makes sense that it could be a lot higher. It's a company not getting the benefit of the doubt like a lot of its peers. It's not being given a super high multiple. Very attractive for me. I think their leadership knows what the future brings. They have some of the best teams in the world, and they're working on several different aspects of this future tech. They're leading in quantum computing. So yeah, for me, this is a no-brainer for me. Absolutely love this name. I'm going to think, look back in 10 years and think just, wow, what a phenomenal company. And yeah, another company doing this robotics, another company doing the driverless cars. I think that is, the marriage of the AI plus, a physical thing, which will be out there in the world. I'm not sure that's going to come next year, but maybe 5 years from now, we will be seeing, a different world of robotic cars and other robots doing human-esque tasks.
All right, KG, take us through what you notice about this chart then for Alphabet Google.
Yeah, this is actually a perfect example of, when the street actually doesn't like a stock, like a Mag 7 stock like Google, maybe it's an opportunity. And we are seeing that kind of come to fruition here when it comes to the price action compared to the narrative that we just were talking about 3 months ago. If you're looking at the chart, one thing I wanted to highlight, anytime that it's in a consolidation or a channel pattern, it breaks that channel. Let's say it breaks to the downside here. The stock generally does go back and test that 200-day moving average. You can see that on the left-hand side here. Back around this time last year, it was consolidating, was trying to push higher, trying to break above that 20-day moving average in blue, but it did see a little bit of a failure. And then it consolidated, and then we started seeing the stock rise a little bit more. Back in December, we had this nice little bullish flag pattern, if you will, but we did have a little bit of a breakdown back in January. Breaking a channel, coming back, testing that 200-day moving average. We failed that 200-day moving average, and we failed it pretty significantly, trading down to around $140 or so. But we have been making higher lows and relatively higher highs here, a well-defined channel pretty much for the last 4 months or so. And what you're actually really looking for, if you're a bull in this name, is try to break above that channel on very large volume in order for us to kind of clear that $200, that $205 level and continuing to move higher. What you don't want to do is hit that that $200 level on very light volume, because then it maybe doesn't confirm the price action, if you will. And if you have any type of breakdown, 20-day moving average, your first area of support, $188. And then you're looking at the 200-day moving average, which also aligns with the support level on that channel, sitting at around $175 to $178 here. RSI looking pretty good, higher highs, higher lows in a well-defined channel. And MACD may be showing a little bit of exhaustion here, but still in a bullish formation here. This looks like a really decent chart, Diane, and this just, once again, an example, a prime example of sometimes when the stock is being beat up because of a narrative, there are buyers that actually do step in and accumulate, and we saw a well-defined accumulation phase within Google over the last 6 months.
All right, Joe, any final thoughts on Alphabet, Google, Tesla, or Palantir?
Yeah, there's going to be some volatility. There's going to be ups and downs. We're not going to just go straight up like Palantir. In fact, Palantir, obviously a company that is long overdue for a pullback. But that said, this is a very exciting time. It's just a time where we're going to be, the world is going to look very different than it does today in the not so distant future. That doesn't mean it's coming next quarter. It doesn't mean it's even coming a year from now. So that's where it's really exciting. And that's where we're going to see these exuberant moments like we're seeing in Palantir. We're going to see some big corrections along the way too. So it's just something, as a trader, it's very exciting. As someone who's just excited about the potential for all these technologies, it's really fun to watch.
All right, thank you, Joe. That's Joe Tigay of the Rational Equity Armor Fund and our very own Kevin Green. Thank you both.